Okay, good afternoon, 12:44, January 3rd, 2019. Going to take a really quick look at SPY, and I'll have you out of here within 10 minutes. And then tomorrow we're going to look at the rest of the charting for the other models that we follow. And then into next week, we're expecting significant volume of trade. So the SP 500 60-minute model is a really super structured model. The last report we put out here, we gave you trajectory for bullish, we gave you trajectory for bearish, and sideways. And you can see how it's sold off, and it's so here, I'll show you a little more clearly on the bottom side. This will be the chart that I use. Well, these two charts are the two charts that I'll use when I come in to trade the S&P here next week. I'll be trading everything that we follow next week for the next 6 months, and all of them aggressively. Anyway, this is the bottom of your channel here. For all intents and purposes, you can use that right now. As long as it doesn't fail, use it until it fails, right? This was the downside target. It dumped a little farther than that downside target. You can see the big plunge underneath where the stops got taken out, and then it popped right back up. So this was your downside target. It hit it really early, but it hit it, and then it recovered. Now, what it's doing is it's pivoting around your mid target. So when you use these models, once you understand how these structured models work, you can use the bottom, the bearish, the mid, the bullish very easily. So this gets going now. If it does get going, here's your target up here. So it makes things really, really easy. Sorry, the guys are in the power tools again. 257.47 is your upside target here, and that comes in on January 8th. So I'm going to finish with this chart today. This is a much wider time frame. This is a daily S&P chart, and this was modeled way in advance of trade getting anywhere near here. And so this is a larger structure, and we had put this in as the floor to watch. And sure enough, now we had a floor here. This is the bottom of a quad, but the actual channel floor here. So it hit the one right before the bottom, and it bounced. And now it's stopped at this trend line. So in other words, your structure is in here, and it's trending towards this target here at 247.40 in and around February 8th. If it gets up over and starts to build, then you can start to look to your upside here. So it depends on your time frame that you're trading, right? So these red diagonal support and resistance lines are what you need to watch. So, and also, of course, your MAs. If it gets bullish, it'll have absolutely no problem nailing this target here at 263.77, January 25th. And if it got extremely bullish, it'll take out this target here at 280.89. So this is what you want to watch for if it gets bullish, and I wouldn't doubt that that could happen. So you'll want to know those numbers. If it gets bearish, your first target is down here at 230.03 on the same day, January 25th. That's on a swing structure. So right now, anything near here at 241.82 is along into this structured area here. Okay, so if you have copies of these models, it's quite easy to use. You'll start to see our trades next week, and we'll be aggressive over the next 6 months. Have a great day, guys. I'm going to cover the rest of the models that we covered in tomorrow's midday, and starting next week, we'll be doing them every day. Take care. Have a great day.